Hi there, Natasha here, Realtor in beautiful Charleston, South Carolina. I'm coming to you with a market update, and so much is going on, from the government shutdown to what is the Federal Reserve doing, how are interest rates impacting the market. So let's jump right into it. So we have more inventory than we have in many, many years. We've even seen increased inventory over 2019 levels. So we really are getting back to what's considered a normal market or a buyer's market. And with that, we're starting to see prices moderate. So they're still rising nationally, but they're rising very slowly. And depending on which metro you're in, you might see that your communities are still rising quickly, but some communities may be going up more slowly, or prices may be coming down in some areas. When we start to talk about the Federal Reserve, they've been in the headlines a lot lately. It's important to know that they do not set interest rates. What they do is they set the federal funds rate based on the larger economy. And what they're trying to do is to prevent things like a recession. They want people to be employed. And we've seen that unemployment has increased and job growth is stalling out. So the goal is for the Federal Reserve to help us avoid a recession. They're meeting again next month, and we're so interested to see what is going to happen. Are they going to drop that Federal Reserve rate, which may impact mortgage interest rates for homes? We will have to wait and see. But they do make another decision next month, but 2 out of 3 Americans are actually really worried about a recession. So if you're thinking about listing your home right now, it's important to take that into consideration, because people are nervous. They are holding off on making big purchases in most cases, or they're a little bit more timid when they do come to the market. So it's very important right now to be strategic if you are looking to sell your home, because we've seen more inventory than we have in nearly 6 years. So there's a lot of competition, and buyers are very wary because 2 out of 3, like I said, are concerned about a recession. So it is time to be smart if you're looking to sell your home. And if you're looking to buy, you may have some strategy here, because there are a lot of homes on the market. You have more to choose from, and that might give you some negotiation power. The good news is that every indicator we're seeing is expecting an ease in mortgage interest rates as we move into 2026. So we're probably not going to see 2, 3, 4% like we saw during COVID, but we might see a move to closer to 6%, or maybe in the high fives. If that does in fact happen, it will kind of ease the pressure on the market. We will see more activity and more buyers get to the market. Even in September, when we saw just a slight decrease in mortgage interest rates, we did see some buyers get into the market, and we did get a little boost of activity, which hopefully will happen if we see an ease in interest rates with this next Federal Reserve meeting in November. If rates do come down, we might anticipate that home prices will start to go up a little bit more quickly. In our area, we still are seeing appreciation, but depending on the part of town you're in, you might see bigger price cuts, or sellers might be more willing to negotiate on things like buyer paid or seller paid closing costs for the buyer, or making repairs before closing. So it's really important that you have a strategy in place if you're a buyer or a seller with a real estate professional. This is not a typical market that we have seen. We are moving into what again is called a normal market, or even a buyer's market. So for years we've been in a seller's market, and now that we've seen that inventory start to stabilize and begin to increase, we are moving more into a buyer's market. So what does that mean for you? Everybody's situation is different. Please send me a private message if you would like to chat. And if you like content like this, please click subscribe. Thank you so much for watching, and we'll see you soon.